Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely excellent day today. In today's video, we are taking a look at the macro and the short-term charts, discussing the recent short-term pullback on Bitcoin, the weekly candle close which has just occurred for both Bitcoin and the total cryptocurrency market. We'll also be taking a look at the altcoin market as it is retesting a critical level of resistance, and Bitcoin dominance as it is absolutely nuking to a level we have retested once over the course of the last 2 years, that being the 50 EMA. We'll also be going over the market data and of course our broader markets. Before we get into it, make sure to smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel. You'll get access to trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart and education chat to the help, the community setup, the news, and our coding chat. Check it out. Join up by clicking the pinned comment of the free channel. Again, pinned comment of the free channel. Contact our admin for all the information. Go ahead and check it out. Let's jump on in, guys. Taking a look at the short term. Over the weekend, and I think it is still the weekend in the USA, but it is now Monday in Australia, we saw some very tight compression between that 50 and that 200 moving average. A large compression over here spanning about 24 hours, which was simply representing a significant fall off in volatility. We saw a break of the 50 EMA resulting in a surge of volatility upwards. Did not actually facilitate any sort of sustained continuation, resulting in a breakback below, and now we have seen the price flush down below the 200. So the overall direction of this price action currently is pointing into that 115 level. But when we're looking at something like Bitcoin dominance, we can see Bitcoin dominance is still currently dropping very aggressively. And it has dropped around 5% in the last week alone, pushing down to the 200 moving average, which has facilitated the total cryptocurrency market cap to continue upwards, and even the altcoin market to continue upwards, as Bitcoin has been more or less pushing sideways. So although Bitcoin is struggling a bit here, the broader markets are actually looking very, very good. We'll come back to all that in just a second. Let's move over to our market data. 24-hour volume and 24-hour liquidations. Let's jump in and take a look at how this is developing. Volume up 55%, 352 billion here, so pretty high. Liquidations at 360 million, again up 144%, pushing pretty high up there. Longs and shorts more or less even, slightly more liquidations to the short side here, as Bitcoin did flush upwards very momentarily here. And although we have seen a large move downwards, we have seen a lot of volatility in this downward move, with some large wicks being eaten up over here, which has caused a lot of short liquidations. Moving over to the broader markets, the DXY is looking okay again. It is holding pretty steadily, waiting out to see how those interest rates develop. At the moment, the overall broad direction is still going to be downwards. This is inherently going to be good for risk assets, but overall, depending on how the interest rate data does develop, will determine where and how fast the DXY does move, whether it be moving down to this 92 to 93 region we are expecting, or whether or not we see a reversion back upwards will be entirely dependent on the overall narrative push by the Federal Reserve moving into the next meeting. Moving over to the S&P 500. The S&P 500 did show a little bit of weakness the other week, but we were able to break above this recent high at 6,330, establishing that the buyers are still very much in control over here, absorbing what was a little bit of selling pressure developing just under this region, representing by falling momentum and of course that red dot print. We have seen the weekly just open up over here, and it has opened up very well, actually opening above this recent high, not only opening above the high, but our prior weekly close occurred at that level. So we were able to hold this level as an area of support. This has gone to do two things. Number one, we have validated this area now as an area of support. So we know this is an area of support. We have completed a support resistance flip. And number two, we know that if we're able to sustain above this area, we are likely going to continue this trend upwards. So provided we sustain above this horizontal level at 6,333, expect continuations 6,400. If we drop back below here, now that we have completed a support resistance flip, that would be a pretty strong sign that the buyers were not showing demand above this level, and we will see corrections back down, likely to fill some of these lower volatility ranges. That is it for the S&P 500, guys. Let's jump over to Bitcoin. Like we said, a lot to take a look at from the short term for Bitcoin, moving into the higher time frame for Bitcoin, again breaking below that 50 EMA, and of course that weekly chart, and of course we're also taking a look at the altcoin market. So before we get into all of that good stuff, make sure to go ahead and sign up to BitGet, BitUnix, and BingX, the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go to support me making this content for you on a daily basis, and of course guys, you'll support yourself trading on exchanges I personally use and I trust. You can go ahead and check it out with the links down below, or we'll play a quick ad that you can also watch. Go ahead and check it out. We'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get right back into it. So a lot to take a look at today. We are going to be starting on the total cryptocurrency market cap, the altcoin market cap, altcoin season, all of that good stuff, and then jump into Bitcoin. So some recent developments for these markets. We can see here on the total altcoin market cap, we have now retested, and we are currently challenging as we speak this major level of daily resistance. This of course is the 1.03 to 1.06 trillion dollar level. This is a pretty critical level of resistance. In fact, it is essentially one of the most important levels of resistance here on the macro chart, because if we are able to break through this resistance, it is highly likely, if we zoom out to the weekly chart here, we are going to be coming back to retest this major level of resistance, which is essentially the last level of resistance before we push into price discovery. So if we want to see like a parabolic altcoin move, we want to see altcoins really kick off. And you know, don't get me wrong, altcoins are doing fantastic already. Just as we said, guys, the break of 940 billion was really that trigger point for when we would start to see money flow into altcoins. We look at Bitcoin dominance in a second over here. We can see just in the last week, as we broke through that major level of resistance on 940 billion, the weekly candle here on the total altcoin market cap and the weekly candle here on the Bitcoin dominance chart go to show that we were dead correct when it came to that $940 billion level. Just as we said, break $940 billion, we will see the next leg up for altcoins. We'll see the altcoin market really start to heat up. That happened perfectly. What we are saying here, if we're looking for that quote unquote parabolic phase for altcoins, we need to break through this major high. And for us to even attempt to push into this high, well, we need to smash this current level of resistance we are challenging. Now, this is a resistance that we need to take seriously. This is essentially the first level of high time frame resistance we are now challenging ever since the breakout of 940 billion. Now, whether or not we reject from this level or break out, the consequences of either of these moves are going to be more dependent on what Bitcoin does and how Bitcoin responds to its current short-term consolidation. And we'll come back to discuss why that is the case in just a moment. But we're going to focus a little bit more on altcoins here. So we know already that breaking through 1.06 is the trigger for the next leg up. We are looking for a move as high as 1.16. And if we're looking at the percentage gain on that move, that is around about a 10% range. If we look at the range of which we broke from 940 billion to the current, that is also around the 10% range. So we could expect a equal relative move for the altcoin market if we break through 1.06 compared to what we've seen over the last week. So that would be a weekly move of altcoins where we see generally, 20 to 50% returns for the majority of larger performing altcoins, 10 to 20% returns for the majority of altcoins, and some altcoins 0 to 10% returns for the lesser performing altcoins. Again, how and which altcoins perform well, poor, or mediocre is going to be very hard to predict. As we've noticed throughout this cycle, there are thousands more altcoins available, and therefore there are more opportunities for people to place their money into. And with that more opportunity, there is, of course, going to be less relative performance across the board. There are going to be some altcoins that do exceptionally well, some that do horrible, and some that do okay, as opposed to prior cycles where we saw the entirety of the altcoin market do exceptionally well regardless of which altcoin it was that you were selecting. So there does require some degree of discretion when picking altcoins that you're going to be trading or investing, but of course that is up to you. I'm not your financial advisor. You need to determine that yourself. When we're looking at the total cryptocurrency market cap and altcoin market cap, what it tells us isn't which altcoin is going to do well. It tells us on a broader spectrum, we could expect money to rotate into altcoins if this were to occur, just like what we said when we break 940, which opens up the potential for some altcoins to do very well, and that is exactly what we have seen. So when we're looking at the altcoin market, it is also important to look at the total cryptocurrency market, because the total cryptocurrency market cap here is, of course, a combination of Bitcoin, Ethereum, and our altcoin market. When we're looking at the total cryptocurrency market cap, we can see the total cryptocurrency market cap has been rising quite aggressively actually over the last week. And Bitcoin's been moving sideways. When we look at Ethereum, we can see Ethereum's absolutely flying upwards. So we know that, again, a lot of that dominance is flowing away from Bitcoin and into Ethereum. And generally what we see is when money flows out of Ethereum, it may even move into altcoins, which will trigger that explosive altcoin rally. Now, what we have seen here on the total cryptocurrency market cap is a positive momentum shift occur on the weekly. This is a very good sign. Now, this is not everything we need, but it is a fantastic indication that we will likely see continuations higher for the cryptocurrency market cap, provided we can sustain this weekly above. So if we can sustain this weekly above the RSI, it is likely we see a green week. If we drop back below, it is potential that this ends up turning into deviation from the range. Now, if we see deviation from the range, which would be the price dropping back below this high, that could trigger a pullback for the altcoin market and a pullback for Bitcoin and the broader market. Now, determining whether we see that or not will be very much influenced by Bitcoin. And as we said a few moments ago, that Bitcoin, sorry, I just dropped something on the floor, sorry about that bang, will be determined by Bitcoin, as we said moments ago. So whether or not we see the breakdown here or the sustaining price, we'll discuss that right now. Looking at Bitcoin dominance is still 60% of the market, so it still takes up the lion's share. So what Bitcoin does in the market plays heavily into where the total cryptocurrency market does go on the short and higher time frame. Very quickly, Bitcoin dominance, and then we'll jump over to Bitcoin and discuss that in a second. Bitcoin dominance is retesting a very critical point here, and that is going to be the 50 EMA. Now, the 50 EMA on the weekly has been retested now for the third time. We had one retest back here in March 2023, a second retest in December 2024, and now a third retest in July 2025. A third retest. This is the third time we've tested this level, dropping below at one time, which was quickly eaten up and continued. We have to assume that closing below the 50 EMA will very much trigger a continuation down for the Bitcoin dominance chart, which will be better for, again, altcoins, which could facilitate that rotation further for the altcoin market to continue to rise this next 10% into 1.16 trillion. So the dominoes are lining up for that move. However, if we bounce here, that is going to be bad for the altcoin market. Moving over to Bitcoin, like we said already, Bitcoin is going to determine whether or not that total cryptocurrency market cap is able to sustain these highs, which will facilitate the altcoin market continuing, or whether or not we will deviate and drop, resulting in a correction. So looking at the Bitcoin chart here, we are developing a very similar, this is a very similar horizontal range. We look at this horizontal range here, okay, and then we zoom out to the 4 hourly and look at the horizontal range here. We have a very similar horizontal range developing where we had this overextension into a horizontal consolidation, like we saw in the 4 hourly chart, again with this massive VRPV gap sitting below us. If we're looking at the current price action on the hourly, we can see a very similar pattern, a very similar channel is developing. At the moment, we have rejected from this local area of resistance at $120,000. This is, of course, going to be that core level of resistance we need to break through to facilitate a continuation upwards. And we have, of course, rejected pretty much most of the way down to the range low now, which is sitting around 115,000. We are expecting this price to continue into 115k. We are expecting this level to be retested. What we can see below 115 is an initial low historical resistance range volume gap, okay? And that spans as low as 111,000, but the crux of it comes down to around 114. So what we could see is if we drop below 115.5, 115, we could see a volatile correction to 114, followed by the price coming back up and then pushing through this high. This would be best case scenario for Bitcoin. It would flush out a lot of these high leverage positions, and of course it would trap a lot of late shorts into this large liquidation grab before we see continuations upwards. That would be the ideal scenario. What I'd be watching for that scenario is I'd be watching for a correction, of course, into here. Then I'd be watching for support to be found within this cluster of price action between 113.3 to 113.8. And that is what we're watching. If we touch this level, I'd probably be watching for reversals back upwards. And if we break back through 115.5, that will be confirmation in my eyes that we are going to come back and retest these highs. Until then, I do expect the price to at least come down to retest 115.5 to 115,000. Now, that is not necessarily going to be a bad sign for the total or for the total altcoin market cap, provided we are able to push back upwards. The worrisome part becomes if we do break down and we fall through this region, continuing into 110, 111. The reason that is going to be concerning is because, number one, if we look at the weekly chart for Bitcoin, we can see the weekly chart for Bitcoin has failed to have that positive momentum shift. But of course, also, if we go over to the daily chart for Bitcoin, we can see the daily chart has had actually a negative momentum shift here on the RSI. So it does have a little bit of weakness, and this shouldn't be surprising. We can see weakness here for Bitcoin. Bitcoin has been showing weakness relative to the rest of the market now for a couple days, so that isn't too shocking. But if we do drop back below into this 110 region, this could result in a little bit of a correction for the altcoin market and for Ethereum, of course. Whether or not we find support there is going to be something we'll have to assess if we retest it. So, to summarize all of this, there are a few different short-term alternatives. Number one, we see a correction to 115 and sustain. That is best case scenario. Number two, we see a liquidation grab into 113 to 114. That is going to be an area of which we are looking for reversals, with the break back above 115 being confirmation for continuations back to 120. Failure to sustain above 113 to 114 will result in a continuation downwards, which would bring the rest of the market down with it as Bitcoin dominance bounces. We will also see the altcoin market correct, and we will see Ethereum pull back as well. Best case scenario that we eventually see a break of 120k, that would facilitate the next leg up for Bitcoin. Where would we expect the price action to go? Based on our analysis the other day, we do have potential targets of Bitcoin based on our vertical dates of August, mid-August, so the 4th of August, the 1st to the 7th of August, the 4th is right smack bang in the middle there, and of course the 6th of October, anywhere between the price points around 132 to 144,000. Hypothetically, those are realistic targets only if we see a positive momentum shift and Bitcoin is able to break up prior to seeing this flush down to 110. If we do flush down to 110, that actually does damage the macro expectations of Bitcoin very slightly. Again, we'll discuss that if it occurs. There's no point going over stuff when it is not entirely applicable or relevant or even actionable at this point in time. That is the analysis today, guys. I hope you enjoyed. Thank you for tuning in. Pretty important stuff going on. Pretty historic moment here for Bitcoin dominance. Altcoin is really performing exceptionally well. We do need to break through some resistance to continue that performance, and we do run the risk of failing to do so based on how Bitcoin performs here in the short term. So definitely watching this consolidation, watching the reaction at these key levels, and maybe even taking some good high risk opportunities if some of these scenarios play out. Thanks for tuning in, guys. Of course, do what you need to do. Follow your own risk management, particularly when we're coming into these times of unknown. We're coming into these times of price discovery where things become a little bit more speculative. It is hard to say for sure where Bitcoin is going to go in the higher time frame, because we don't have any historical data up here. We have to speculate to make these targets. All we can say is we can watch what is happening now. We can trade level by level as the price develops, as the levels develop, and then react to these levels based on, of course, risk assessment and risk tolerance. Thank you for tuning in. Have a fantastic rest of your day. I'll catch you guys in the next one tomorrow. See you then.